What's up, everyone? I'm Alex Neff, your real estate resource and host of the Bucks County Living Podcast. In these next few videos, I'm going to be discussing some different mortgage financing options that home buyers have available to them. With interest rates going up, the mortgage industry gets very creative with ways to finance deals and continue to help people achieve the goal of home ownership. So today I'm going to talk about the 2-1 buy down. So the 2-1 buy down is basically seller's assist from the person that is selling the home, and they will give the buyer a seller's assist or a chunk of change towards the closing cost to help buy down the points, buy down the interest rate. So what this means is that for the first year, the interest rate is going to be significantly lower once you do purchase the home, once you close and settle and everything like that. The first year, the rate will be significantly lower than what the normal rate is going to ultimately end up being. And then the second year, the rate will go up a little bit, but it's still going to be lower than what it should really end up being in the long run. And then in the third year, so finally you have the first year where it's super cheap, second year where it's still discounted, and then the third year it's going to be ultimately the interest rate for the life of the loan. Now, when I say life of the loan, it doesn't mean 30 years. That doesn't mean that you're going to be trapped into this 30-year fixed mortgage rate of 7, 8, 9, 10%. What the hope is with this this financing tool, with the 2-1 buy down, the hope is that people will be able to refinance their mortgage within the 2 or 3 years of the life of the loan of their home that they've just purchased. So that way they can refinance into a fixed rate that is substantially lower or a little bit lower that makes sense to the life of the loan for that 30-year fixed rate, or as long as you intend on staying in the home. So what I'm going to do is I'm going to pull up an infographic here so that way we can look at a real world example. So basically it's a temporary buy down, right? Kind of what I was saying. This allows the sellers or the builders to pay a lump sum amount at closing on the buyer's behalf in order to lower the buyer's monthly mortgage payments for a period of 2 years, right? So like I talked about a bit earlier. Now, here we go. In this example over here, the purchase price of the home is going to be $400,000, assuming you're putting down 20%, which is that $80,000. So that's how we have the loan amount of the $320,000. Now, the subsidy paid by the seller, which is considered seller's assist or a seller concession in the real estate world, would be $7,584.24. So that's how much that you're going to get towards a closing cost, towards this temporary buy down on behalf of the seller for the person buying the home. So the full rate, right? So, and then once again, this is just an example. Rates fluctuate all the time. So as of right now, when this infographic was made, the fixed full note rate was 7.375 with a 7.565 APR, right? So that's kind of high. I mean, 7% is like average for the history of the mortgage industry, but like, you know, in retrospect, back in the 80s, rates were like, 18, 19, 20%, sometimes higher than that if your credit wasn't so good. And in the 90s, rates were around the 7%, and that's when everybody kind of refinanced and they thought that was low. So the market that we're coming out of is a lot different than where we were, but they were basically just giving away this free money. So anything around 7% is still pretty average. Anything under 4.5 is supremely low. So that's what the hope is for this financing tool. With this tool, they hope the mortgage industry, the financiers really hope to be able to assist in buying down the loan, buying down the interest, making the loans more affordable in the first 2 years. As you can see, you save a couple dollars, right? So, and then, eventually refinance out of the loan. So we'll take a look at this one with this temporary buy down, with this 2-1 buy down. So year one, we have the buyer's payment of $17.91, and then the equivalent interest rate is 5.375. That's significantly lower than the 7.375, right? So the buy down amount is $418, and that's pretty much what you're saving every month in this interest rate that has been discounted because you purchased it at the table with the closing with the seller's assist, the closing costs. Now in year two, it goes up a little bit, but still significantly lower, right? So now in year two, in this hypothetical, it's 6.375, and your monthly payment is still under $2,000. So you're saving $213 a month for that second year. So this is clear that in these first 2 years, you are saving thousands upon thousands of dollars in this 2-1 buy down that the sellers can pay for. And then in year 3 through 30, you're at your normal fixed rate, that's 7.375, and your monthly mortgage payment is estimated to be around $22.10. So I think it's pretty clear that this is an excellent tool not only for home buyers but also for home sellers too. If a seller is offering this 2-1 buy down because the buyer is very rate conscious, then this is a wonderful tool to be able to sell your house still for the premium that you were hoping for, what your house is truly worth, instead of taking a hit because the buyers are very, very price conscious, a very, very monthly mortgage payment conscious. So I really hope that this was an excellent way to kind of talk about some of the different tools that are available. And I'm going to continue to put out some more videos with mortgage industry tools. Now, keep in mind, I'm not a mortgage lender. I don't work in a mortgage company. I've never worked in a mortgage company. I'm a real estate agent, and it's my job to kind of know what kind of tools are available to the public for the home buyers and home sellers, because ultimately I want to help. I want to help people achieve the goal of home ownership or reach all of their real estate goals, whether it's buying, selling, investing, anything like that. So I really hope that this was useful. And if it was, make sure to like that, hit that like button, subscribe, comment, let me know what you think. And if you have any real estate questions, I'm more than happy to answer. Thank you so much.